Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Eddie Hertzman, founder and president of Sourcing Journal. He joins me on Black Friday, as always, to discuss how holiday shopping is expected to play out in 2022 as 166.3 million people are expected to shop in store and online from Black Friday to Cyber Monday, according to the Conference Board, a nonprofit research organization. Eddie, it is great to see you as always. Welcome back to Trade Talks.
Great to be here, Jill. Happy holidays.
Yeah, you got it. And same to you. And it seems as if the promotional season is now extended through October. How do you expect this Black Friday to shape up this year?
So 2 in 3 shoppers that were surveyed say they plan on going to the stores. So I think we're going to see a lot of activity this weekend. But I think that Black Friday as a barometer of success for this holiday season, you see, Amazon had an extra Prime Day. Target started their promotions in early October. If you go online earlier this week, I saw J.Crew at 50% off. Gap was 40 with another 20. So the promotion started early and aggressive this year. So I think we're not going to have a really good sense of this holiday season till probably the end of December into Q1. So it's a barometer, but it's not the entire picture like it once was.
Yeah, I was just going to ask you, how important is Black Friday and Cyber Monday, in fact, Cyber Week? How important is it this year versus years past? It just seems as if shoppers have so many more options now that urgency isn't there.
Yeah, I definitely don't think it has the same importance. I think the creative minds out there need to come up with a new term. It seems like it's Black Quarter. But I do think we're going to see, I'm more concerned about what the retailers are going to have to do in order to move the merchandise this holiday season. We have an incredible amount of inventory that is just plaguing these retailers. From the first half of this year, between January and June, retailers brought in 24% more merchandise over last year. And if you account for inflation, that's a 40% more dollar-wise that they're sitting in warehouses with. We recently did a study with Alex Partners, and 60% of retailers said they intentionally brought in this inventory to buffer against stockouts, to buffer against supply chain disruptions. But unfortunately, this didn't work to their advantage as the goods arrived and now they're sitting in warehouses or in the shelves and it's not moving.
Right. And I also know you spend a lot of time at Sourcing Journal looking at the supply chains. How does 2022 look compared to the pandemic years if we kind of work through these supply chain issues?
I definitely think that it went from a supply issue now to a demand issue. I think that we are not completely out of the woods here, but the problems have moved. So what became an ocean issue and massive congestion at the ports. Now, interesting, we saw a lot of the movement to the East Coast ports. Recently, we had more imports to the East Coast than the West Coast, which is very rare. But the problems are really happening on soil. FedEx raised their prices 6.9%. Warehouses are slim if you could find them, and the prices to the warehouse the goods are up. We have a potential rail strike. So once you have the goods here, we don't have an issue with getting the goods here. All the retailers have it. The problem is once you get them here, what do you do with it? And I think if you go online, you see a lot of retailers are trying to incentivize their consumers to either pick up in store or slow down the shipping. For example, Gap has a promotion. If you're willing to wait 10 to 15 days and get the goods on December 15th, they're offering a potential to get 50,000 more bonus points. We're seeing the cart values. If you spend X, then you trigger free shipping. It's very hard right now for the retailers who have goods sitting in the warehouses at a higher cost of goods. You have a consumer, which is definitely more discretionary and under pressure. You have logistics costs that have increased, and you have probably going to have to discount this 50+% to get it out there. So that's 4 negatives right now. So you have margin compression happening everywhere. They have to find a way to subsidize the pain, and slowing down or hedging some of those logistics costs is one of the ways they can do it.
You had mentioned that it's rare to see more shipping to the East Coast versus the West Coast. What's the significance of that?
Well, I think there still is a little bit of a bottleneck on the West Coast. So people who tried to hedge that, they wanted to get fresh product into the stores as quickly as possible. So they moved it to the East Coast. And it's moving a little bit quicker there. But again, you have to remember, a lot of people have their logistical setups on the West Coast. So once it goes there, it still has to move throughout the country. So I think it was just a buffer this season to try to move the new goods into their warehouses and distribution centers and into the store floors a little bit quicker.
All right. Eddie, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.